Good evening, everybody, or good morning, good afternoon, wherever you are in the world. But we're here at the PAB conference, and this has been quite exciting. We had a plenary session where we had, the good Professor and Percy, two prominent economists in Zimbabwe, sparring, and they had a number of the issues that they discussed. And I thought, let's actually do our Friday drinks and let's host them. We've been meaning to do this for a very long time, so I'm just happy and glad that you gentlemen, you're here to join us. How are you finding it so far, Prof? The conference and the plenary sessions?
No, so far so good. What I liked is that there was a lot of technocratic thinking, where colleagues were sharing their experience, what happened on the ground in terms of our currency, in terms of our economy. I think what is very clear is that the economy is not a fiction, it's not a movie. Real things happen on the ground, and evidence came through that we need to be pragmatic. I think a number of takeaways for policymakers, and I'm sure my colleague Percy will take home to Central Bank some of the suggestions on how we can strengthen our currency. Yeah.
Okay. And Percy, how's it been for you?
It has been good. We learned a lot. Concerns about
Thank you.
the market, from the market, the accountants, the auditors, relating to how the challenges they are facing in the environment and against the policy, the government policy, Reserve Bank policy, especially on reporting. So it has been an eye-opener, and there's quite a lot of take-homes on my part, which are very important to inform policy going forward.
Okay, fantastic. And then for us to do this, because, it's not every day that we have you guys come on the show, and it's very relevant that we talk about what's actually happening in the country and how we can solve it. So I can tell you the big paradox right now that's sitting in the marketplace that people are worried about. It's the $1.2 billion that government owes contractors in the last year. And the idea is, should this be paid out or it shouldn't? So there's one strong argument that argues that if you supplied government, you did so and you took on government risk. So if government doesn't have the money, then government should just default, and the pain goes to the creditors or the suppliers, but not to the entire economy. But if this money is paid out, the problem is it will cascade into a currency devaluation and a currency problem. And a currency devaluation is a bigger problem than an economic depression. Then the other argument says, wait a minute, government has already made a commitment and people actually delivered goods and services and they must pay. And the consequences, yes, would be a currency devaluation, but that is relevant because a currency devaluation or currency instability is a much better evil than an economic depression. So I want to hear from the economists what you think. And I want to start with you, Percy. You've got this quagmire, you've got this paradox. What would you do and how would you solve it? Which one is a lesser evil?
The last update I got is government has paid significant amount of the outstanding balances relating to creditors, relating to surrender, but also relating to treasury bills. I was informed that the outstanding balances on treasury bills and this on surrender have been paid, and government had started paying the outstanding balances relating to creditors. And going forward, we got the impression that government has taken corrective actions to avoid situations of contracting or spending outside budget. Clearly, because the outstanding creditors, most of them, we are informed, they've been contracted outside the budget, but which is an issue between the spending parties and the suppliers. But it's an issue that I'm sure is being attended to.
So you're saying the problem is with the line ministries?
So this is what I'm made to understand, that some of the amounts that were contracted, they were actually not contracted outside the normal approvals from Treasury or outside the budget, which could be what has gotten us to where we are today. But one always take comfort in that the Treasury had honored up and it started paying the outstanding creditors. So we hear, but I'm reliably informed. I'd also check that the outstanding surrender money, which to me was a concern, they were cleared by Treasury. We have major exporters who were owed in respect of unpaid surrender monies, and we reliably informed that those surrender monies were paid. But obviously, save for those that I think Treasury or even in the monetary policy statement have been now classified as legal debt, and against which instruments, maybe TBs or negotiable instruments, were going to be issued. All I can say is the issue is being resolved and the progress is encouraging. And despite those payments happening, we have seen the markets have remained stable. They have not spent the market out of control, these payments.
In other words, you're saying you took your cake, you kept your cake and you ate it too, because you've got currency stability and you paid out suppliers and nothing changed.
So in a
There was
way,
no trade-off.
In a way, you are encouraged to think that a more stable environment would also be a relief to the creditors, especially those that have been owed for a long time, because it guarantees value of their outstanding balances. Unlike in the past, where government would pay faster, but that value would be immediately eroded by currency volatilities and inflation. So I see the environment currently obtaining, delivering some relief to the creditors, which is different from what was happening in the past.
Okay. Prof, given that synopsis where Percy is actually telling us that they've made payments, significant payments, and the currency has remained stable. So they've solved the paradox. Would you like to give us your view and your synopsis as well?
Well, thank you very much. I think the starting point is that I'm very worried that, as reported by my brother, Percy, that there were some government departments and line ministries we spent outside the budget. And the Ministry of Finance goes out to pay those outstanding balances without addressing the root cause of that challenge. Because one will be tempted to think that we are condoning corruption, and it worries me a lot. And I also don't know where Parliament is, particularly on that matter. because they watch this program, say, where is the Public Finance Management Act in play here? When we hear this kind of allegations, which are quite serious, that's first housekeeping issue, hygiene issues, in as far as this state is concerned. Now, coming back to the submission by PACE that government is paid, I doubt it. I doubt it not because I work in government. I don't have any information that they've paid or not paid, particularly in terms of the recent payments, but I doubt it in terms of capacity of government to have paid that money. Taking into account that if you look back, by last quarter of the year, they had collected about 63 billion ZiG, which was almost like $2.5 billion. Look at that. And they have a debt of 1.2 billion. And half of that is almost what they collected last year.
Quarter.
Yeah, so if I want to fast track, if I'm not mistaken, government collected about 6 billion by the end of the year. So almost one quarter of that has gone to pay suppliers. Yet government was living hand to mouth. Where did the money came from? And that's a fundamental question for accountability and transparency. Of course, I'm not saying they paid 1.2 billion, but if they've paid significant share of the 1.2 billion on outstanding service providers, before we factor in what is saying that they also have made significant payments on outstanding retention for exporters, I think we need to understand where the money came from.
Okay, so just to be clear, and Percy, correct me if I'm wrong, we know that the number of TBs that were actually outstanding was about 177 million as of last year. But this year we've got about 785 million that's still to be paid. But if I'm understanding Percy correctly, you're saying the 177 million has been settled fully. Then we know that the surrender, we don't know what the number, the figure is, but it should be upwards of 100 million. These are the surrenders, the exporter surrenders that was outstanding. And you're saying that has been paid. And then you're saying part of the government contractors, that money that was owed, that has been paid. And you're saying that has happened over the last 30 days. Are we correct with the facts before Prof comes in or chimes in with his views?
I may not have the exact numbers, but what I'm advised is like I've indicated, the outstanding amounts relating to the surrender was paid, and it's easy for me to
verify,
to even align with what may be coming out of the ministry, because surrender means, the outstanding surrender means we have gotten the foreign currency, but we now need to pay for that foreign currency, other than the foreign currency which might have been expended prior. So, but also if I look at the budget and the numbers that are coming in terms of our collections and our expenditures on a monthly basis or periodic basis, you'll find out that we have been collecting significant to be able to expunge the obligations. I'm also sure
without causing any instability.
Without causing any instability, and the ministry has not sought the recourse to central bank
overdraft facility,
which is quite encouraging. So the outstanding obligations could be a reflection of the commitment by the ministry to live within what it is collecting. So they would rather not seek recourse to the central bank than pay in an unsustainable way. So it could be that reflection.
So we now have fiscal discipline.
It could be a reflection of the fiscal discipline of living within what you are collecting. And the benefit to the market, whilst it has got negative ramifications to those affected, the benefit would be when you are paid in a stable currency. You would want to agree with me that so far our currency has been stable. Since the last quarter of 2024, we have experienced relative stability, and we are in a period of stability with the forecast being stability until the end of the year.
Thanks. So we've been given that context.
Yeah, I still doubt it because my bone of contention is on the current financial status of Zimbabwe. I think we need more information as to where the money came from, because if we look at the 2025 budget statement, government put forward a budget size of 276 billion ZiG, right? And the difference between the expected revenue and expenditure was 4 billion ZiG. So in actual sense, it means revenue was supposed to be 272 billion ZiG and expenditure 276 billion ZiG. And then that money is appropriated to various line ministries and departments. So there was no line which was indicating payment of service providers. Right. So I'm just wondering, say, those significant amount of money, where did they come from? Can I be allowed to prophesy that government had to do veremending, where you are taking money from some cost centers or line ministries and declare outstanding payments? So for accountability purposes as a country, this is an area which is quite worrying. Right. Then the last point I want to talk about is that if it is for sure what PC is saying, that we made significant payments without affecting the ZiG, clearly he's insinuating, and he can correct me if I am wrong, that they were paying in US dollars. That's the only reason. No ZiG payments. Because if they paid in ZiG, we could have seen it in the market. So by that token, can please confirm, maybe through you, moderate, that the government has ditched its own currency in favor of this US dollar?
The question, a very direct question.
So before I answer that question, maybe a clarity when I'm saying some expenditures could be outside what government would have budgeted for. Let me give you an example of agriculture. We had a very good wheat season, but even including this season, Treasury and the Minister of Agriculture was very clear to say, we are only going to be buying back the wheat from the Fumvuza and small scale producers. The commercial producers, farmers, should look for the market from the contractors and other off-takers in the market. But despite that clear instruction, you would find, on account of lucrative prices, producer prices offered by government, some of the producers, commercial producers, still delivered the wheat or attempted to deliver the wheat to GMB, which then puts pressure on government, on the fiscal.
Did GMB take that wheat?
So I'm not very sure, but this is what some of the. I'm just explaining some of the pressures would then come from, despite, because I think the government policy was you deliver to the next depot, and those that did not even qualify would then deliver, which puts pressure on the numbers that government would have budgeted for, which is very unnecessary. So I think the message out to creditors is that even government suppliers, that it's self-defeating, or it may work against us if we deliver products when clearly those products are not supposed to be delivered.
Okay, so
to government.
I think
Just
there's no disagreement there. Let's park that, because I think the good prof is aware of that and he's accepted it, and he said it's a misnomer in any case, and you admitting to that is actually telling us that we have a fundamental problem within our government, and parliament, which is supposed to oversee this, needs to highlight this issue. But that's not the point of disagreement. The point of disagreement is the prof is saying the government, has it paid in US dollars or it has paid in ZiG?
I think the payment would be in the currency contracted in.
No, from the information that you know, is it in US dollars or it's in ZiG?
Why I want to explain why this might not have caused some havoc in the market is, if that is coming from the budget and it is budgeted for, it's just an exchange of value from one party to the other, because government collects its revenue from us, but when it collects and pays another person, it's just a movement from one person to the other, with the government being the intermediary, sort of. And this would not drive the market out of control. We always emphasize the need for government to pay within budget. And this is the discipline we want. And this is the discipline I think government was also trying to observe, by not paying when it didn't have the capacity, by waiting until they've accumulated enough dollars to be able to pay. Normally, the government revenues are depressed in the last quarter of the year, in the first quarter of the year, reflective of the seasonal nature of our economy and therefore our inflows. But as we get into the second quarter, we start to see the revenues peaking. But in line with that trend, that seasonal nature of the revenues, I am encouraged to think that the improvement in revenue inflows would have capacitated the government to pay the outstanding obligations. We have also seen the numbers that came from ZIMRA. I don't recall the actual performance in terms of the inflows, the revenue generated by ZIMRA, but I'm sure they've performed well and to expectation, which then speaks to the capacity of government to be able to pay creditors.
I think there were fundamental differences. The first one is that what Percy is saying, from balancing act of the budget is concerned, to say if government pays what was owed, which was, and again within its means, it won't cause a change rate run away. It can only happen in textbooks, right? In Zimbabwe, there's an issue which has emerged based on the experience which people have gone through of currency crisis and loss of value, what is called currency preservation. So you don't need to be a rocket scientist. As long as government pays in ZiG, it is given that whoever get that money will change that money into US dollar, and the rate run away. And anyone who's watching this program will agree with me that the government is paid. That is not a debatable issue. So what I can only say, without trying to keep on going around this issue with my brother here, is that if government is paid indeed, as he's saying, they've paid in US dollars. And by that token, they've ditched their own currency. That is what I am reading. And government should come out and correct me if I am wrong. They should show how much they've paid in terms of ZiG. Where I sit, they've not paid in ZiG. That's my understanding of economics. The point I also want to raise, the last point I want to raise, that government pace is not in good shape. So I'm trying to correct my brother where he's saying there have been improvement in collection. No, nothing of that nature. We've seen major tax heads, tax contributors, tax drivers, such as the 2% tax, the IMTT. It used to be contributing 16% of total revenue going to government. It has gone down to around 3% of total contribution. The corporate tax, which used to be contributing around 20% of total revenue, is now around 9% because of informality. The informal sector has become a national security threat to an extent that the government has no capacity to collect as much money as it is expecting. I saw a Zimbabwe report where they were indicating that they're targeting about $7 billion in terms of collection this year. And that's not enough money to support our national requirement for an economy which is now around $30 billion economy. You remember during the GNU, we used to be having a budget of around $5 billion. And when our GDP was just below 20 billion. So you can't then say you have capacity when there's no corresponding movement of revenue going to government when the economy has grown. So government does not have capacity to pay. And I still feel that and think that the debt is still there, a significant share of it.
All right, fantastic. But we need to move on, and we can then carry on this debate, and people can comment and tell us their thoughts as far as this debate is concerned. And what will also be very useful for government treasury is to actually come out very clearly and give us the numbers on what was paid and what wasn't paid. The next question that I want to move to, because that was more fiscal, so I want to move into the monetary system. So the monetary system, I want to focus now on just the nostro. Now, if we look at total deposits, I think the latest numbers that we have is as of January. We now know that total deposits in the market is about 3.3 billion, but 500 million is ZIG. So let's put that aside. It means that US dollars in our nostro is about total deposits. It's about 2.8 billion. And we now know that actual cash is about 700 million, about 710. It's gone downwards from 729 in December, and in January it's around 710 million. And to give context, 2 years ago, it used to be 1.2 billion US dollars. That was either as notes and coins or in our banks offshore. So that's moved from 1.2 billion to around 700 million, while total deposits are actually increasing. Do you think there's a problem there in our nostro? Are we safe? And what is the monetary authorities? What are they doing to preserve that monetary system, the nostro monetary system?
So in a multiple currency regime where you're using the US dollar, which you can only generate sustainably through exports, any credit creation in US dollar has got the potential of creating virtual balances, what we call virtual balances. It's therefore unsurprising that the central bank is also, along with the tight monetary policy on the ZIG, they've also tightened the US dollar in response to that potential challenge. This is why a US dollar regime or a multiple currency regime may not be sustainable, because it has got the potential of mutating into an RTGS or a local currency or some virtual balances, which become very difficult to deal with. So you always want to be monitoring and intervening through the monetary policy tools, the extent to which or the threat relating to virtual balances. I can assure you that the Monetary Policy Committee is alive to this threat, and has been taking necessary measures. I've already indicated to you the measures taken on the 27th of September, along with measures taken on ZIG, that is the hiking of the statutory reserve ratio on US dollar to 30 and 15%, depending on whether it is a current or savings or term deposit. So that is the tight monetary policy stance. We got the impression from the market that it was not necessary to tighten the US dollar because it was against the growth drive in the economy. But this is exactly what you are trying to deal with, the risk that you are trying to deal with. But this is also at high level the reason why you always seek to de-dollarize faster and deal with the challenges, the corruption of the US dollar. It corrupts. It is very difficult to deal with in a currency regime. So this is the thinking. You always want to move very fast to deal with the US dollar because there will always be issues that come out that need your attention all the time. The watchful eye of the regulator all the time, as long as there is the US dollar in the currency system.
There's an acknowledgement there that, and it's real as far as facts are concerned, that we've actually been exporting more. So over the last 2 years, exports have actually increased, and inflows, not just exports, but even inflows, US dollar inflows, have actually increased. But the amount of US dollars in our financial system has actually decreased from 1.2 billion to just 700 million, just up, just above 700 million. And total deposits have actually increased, which means that the virtual monies, credit money in US dollars, has actually increased. That's a huge misnomer. And I'm thankful that Percy has actually recognized that it is a worry. Can you give us your synopsis and how you look at that, and how, and given what Percy has said, what we should really be worried about? Or not?
Yeah, correct. Thank you very much. So I think over and above to what Percy has said, I think for the first time we agree. And I think this should go in the records. That this is a risk, and I think the way he's unpacked it is very correct in terms of the exposure it gives the country. We are in a replay of 2013 to 2018 during the time where we were dollarized and we had virtual currencies, which then became RTGS. And we were saying with money, but we didn't have real hard notes and coins. But where I need to also to value add to what Percy has said, I take note of the policy instruments of raising the reserve requirement ratio to 30%. I would also want to challenge, in as much as I respect that policy measure, to challenge them to look at its implication, negative implication, from a cost-benefit analysis, from a quantifiable, not this talk which you are doing, cost-benefit analysis, to say which one is better. Because for me, it's an egg and hen debate, where we are saying, yes, we want to reserve some dollars to deal with possible risk, but at the same time, we are drying out the market from a liquidity perspective to an extent that businesses are failing to access lines of credits. Yet we want to drive production to defend the currency, to build more foreign currency, which should be able to increase the physical notes and coins in the market, particularly in a dollarized environment. And it's rightfully so that export is the most reliable source of liquidity. He left out diaspora remittances. So now that issue, I think the bank has got a challenge to look at it again. To say, isn't it wiser to allow this money to go for productive use, substitute imports, and also to drive exports than to hold the money at the back end? You're stuffing the market. So that's the homework. Then the second point I also want to raise is that you raised the fundamental point there. 2024, Percy can correct me, I think we almost hit $13 billion in terms of foreign currency receipts.
Exceeded.
We exceeded. Yeah, excellent. Thank you for that. $13 billion. So my worry now, over and above your instruments, I think accountability of foreign currency has to be taken center stage. How can you receive above $13 billion? I think even before independence, we never got that amount of money. And I think we've done well as a country on that note of receiving that amount of foreign currency. And we should then be able to put all our security system in terms of dealing with corruption, illicit financial flows. Where is the money going? I think we need a paper on that.
Okay. There's an interesting one there. When I looked at the financial system, that we've got 13 billion dollars coming in.
Yeah.
But in the financial services sector, we then only have 700 million that stays as stable deposits. Part of it, one could argue, is it goes into the informal sector. So yes, we receive, especially the remittances, that never really gets into the formal sector. So give or take another 2 billion that stays in the informal sector. But there's an important one, and I want you, Persistency, to really help us to understand. It's gold. In the way I've understood it, gold does not come, the money, yes, it's formal and it goes through Fidelity, but it doesn't come into our financial services system. Would you like to explain why gold is separate from our financial services system? Because that would actually boost our financial services if that money was coming through our financial services. Or am I wrong in assuming that that money doesn't, flow through our financial services system, but it's cash and it just moves parallel to our financial services?
Your observations are right. And I was also trying to reflect on the real contribution of gold to the economy. But I am more inclined to think that the contribution is more on the livelihood that gold is supporting, just as tobacco is more on the livelihood that gold is supporting in the country than contribution to fiscals, than contribution to liquidity in the formal service sector, financial service sector. Reason being that the bulk of our gold is now being delivered through the small scale and artisanal miners. And that's the bulk. These small scale and artisanal miners, they are not subject to surrender. All we get from the small scale and artisanal miners are royalties. And it is easy for you to calculate how much the fiscals in terms of contribution from the small scale and artisanal miners might have received by just looking at the royalties. So clearly, in terms of that contribution, is not much. But I'm more tempted to look at it from a national point of view. The number of people that are dependent on the bullion, on gold in this country, especially small scale and artisanal miners. And I'm also starting to see other players in this subsector who are now improving in terms of organizing these small scale and artisanal miners, which is quite encouraging. But clearly it's also an area that we need to reflect deeply to see how value can be enhanced out of gold. And this is more important, especially at this time when the price of gold is increasing. You don't want another missed opportunity. The price of gold has now breached $3,000 per ounce. And all indicators on the ground are that the price is going to continue increasing on account of its safe haven status and what is happening in the US economy, the Trump administration. So you are right to invoke a discussion around bullion, around gold at this time when these dynamics are happening at the global scale.
Okay. So, Prof, the facts have been laid bare. What are your take on this? That we've got this parallel financial system where, as far as gold is concerned,
I mean, it worries me a lot because it's tantamount to creating avenues for corruption. That's why you hear that we lose illicit financial flow exceeding $1.8 billion annually, confirmed by ZEC, Zimbabwe Anti-Corruption Commission, then the Commissioner General, Madam Matandamoyo, very clear that is delaying our quest to achieve Vision 2030. And clearly, you cannot exclude the people in the financial service sector. I don't see the rationale of not allowing them to be banked. And yes, the differences can be in terms of the export retention, but clearly the money must be through the financial service sector. We hear figures of $100 million being externalized every month on gold. And when we also saw the Al Jazeera documentary, it was speaking to that. Yes, it was. People have different views on that, but it can only be looked at as the truth, but nothing but the truth. So I would want to argue that because gold is part of the financial architecture, it's a critical asset for the country, and it must be channeled through the financial service sector. And even their payments should be channeled through the financial service sector, and they must be banked.
Yeah, I think I tend to agree that at least as the authority. Sorry, I just need to quickly move, but I think my views on this is that financial desegregation is painful for the country, because if that money was actually banked, then you get the credit multiplier and you get the deposit. You actually get banks to doing their core business, which is actually lending. And there's a lot more we could do in our gold sector if that money was actually just going through the financial services sector. Payments, I understand people want cash, but if the financial services system was actually stable, then the livelihoods that you're trying to encourage, they would happily take on ZIG or use the financial markets rather than using actual cash. That's actually not good for the economy. But I want us now to move, because I know we're pressed for time. I want us now to move to the international trade, and this comes with on April the 2nd, we had Trump announce his Liberation Day tariffs, and the world has been in havoc and tumultuous ever since. And we need to now look at it from a Zimbabwean perspective, because the government of Zimbabwe has actually come out and as a response to the reciprocal tariffs, it has come out and it has said that we would look at exports from America as zero tariff. And in that way, that's how we're responding to America that has slapped us with an 18% tariff. Now, one could argue that that's I've come out in support of the government of Zimbabwe in doing that, primarily because, we've been outside of AGOA. And this is the big doorway of us getting into AGOA. But I'm not confident that the government of Zimbabwe really knows what it has done and what it means. Because if you look at our tariffs in Zimbabwe, duty, customs, VAT around imports, it's about 30% of our revenue, Zimbra revenue. Do you think that government is earnest in opening up trade and in agreeing to a 0% tariff with America? Give us your view. I know I'm speaking to you as if I'm speaking to government officials, but you have a better understanding of them. Do you think that the government of Zimbabwe will carry through this zero tariff with America?
Firstly, what the development from US shows us is the world has become increasingly risky, and we are exposed to the risk afar. And this has been happening post-global financial crisis, that we are increasingly exposed as a country, and therefore we should also be more responsive to the developments, the global developments. Unlike in the past, I don't think this time you can afford to finish this show without talking about the global environment. It's quite important. Mm-hmm. And Zimbabwe must also be seen to be relevant in the global environment. Yes, we could be, in terms of trading, our trading between our country and the US remains very low. I think 6% or 0.6%. I'm not very sure. It remains very low. I think you are sending the positive message to the world that in line with the executive's position and the position that has been taken by the country to open the economy and to befriend everyone, especially in the economic space, you are very responsive to issues that may work against that position. So what government has done, despite the very little trade between ourselves and the US, is to send the right message to the world. They've played their politics very well, and I'm sure the US is going to respond positively to what the country has done. Also noting that there are a number of countries who are on the queue to negotiate the move taken by the US. We could be very low on the queue in terms of the queue, but I'm sure the move that has been taken by our government to reciprocate positively by removing all the tariffs, to revisit all the tariffs, will send a good message to the US, and we shall see other countries following suit, and it will be history on part of Zimbabwe that imagine if all other countries respond the way Zimbabwe has responded, which I think is what the Americans would want, a zero tariff world. What would happen to the legacy of Zimbabwe having led this development? So we are very happy. But it also invokes a sense of wanting to relook at our domestic issues, not only relating to the US, but relating to the region. That have we pitched at the right level? Are we doing what is consistent with the regional realities, where we're going as a region? Remember, there is a Africa Free Continental Trade Area. We should prepare ourselves for a free trade zone, right? Which is what is coming. And these issues of tariffs would take significant center stage as we progress as an economy. But also other issues that are befalling us relating to even generation of revenue that you are talking, or even the environment itself. There may be need to then start looking at the environment at large, whether that environment encourages trade, etc. But I'm very happy. The Minister of Finance, Professor Mtulingo, has already announced that they have got plans to revisit after concerns that comes out of the market relating to the regulatory fees that are unrealistically high in the country, but also relating to our tax regime that the minister has indicated that is revisiting those taxes.
Prof, you're a trade economist. Your views on this, I think it's very clear. You stated that you support the government of the day and what they've done, but I want you to really cut into the weeds. Do they really know what they've done and what it means? That now Zimbabweans, I mean, the most obvious one is now we can import American cars at zero. I mean, just think about it. You know, a car that was going for 50,000, it means we were able to import it for 25,000. And especially the luxury cars for 200,000, now it's 100,000. Or even the smaller cars that we're importing from Japan, now America suddenly becomes cheaper. And when you look at car imports, it's over $1 billion. Now suddenly, and revenue, government revenue from the imports was a quite significant contributor to the fiscus. So do they really know what they're doing? I know we support what they've said, but do they really know what they've done?
Well, thank you very much, Tinashe. And that starting point, let me make it very clear. I like that move by government to remove tariffs. And let me say tariffs. Because when we say tariffs, we're talking about import duties, right? And for me, from a political point of view, before I answer your question, specifically your question, it was a good move in managing the tension for purpose of engagement. But in terms of, do they know what they've done? Yeah, that's a very good question. I doubt, I'm being prophetic, that the government is aware of its full implication, particularly on the revenue. But I'll tell you one thing. If you focus on import duty, clearly they're going to lose all the possible import duty with regards to the duty on a car imports, as an example, as a particular example. One of my PhD thesis, I reviewed the impact of tariff phase down or removal of duties. I used two models. The first model, I was looking at the impact of removing the taxes, the import duties, right? And it shows that, yes, you lose significant revenue. But then the second model was capturing the possible impact of removing import duty on revenue when you factor in VAT. So it showed that revenue could increase possibly by 53% because of the volume of imports. Because you'll be taxing like an elephant. So 10% of an elephant is bigger than 100% of a rat. So that influx can actually help us in raising our revenue for the government. So if they do simulation modeling using those models developed by World Bank, they can see that. So on a balance, it will balance out, but it's also good for the people in terms of welfare, because you would then be importing cheaper cars, and if we had a strong motor vehicle industry, they will be crying as well in terms of deindustrialization. But on the overall, I think government is making a political statement that they are an enemy to none and a friend to all, as His Excellency always saying. Yes.
Fantastic. And on that note, ladies and gentlemen, thank you very much for the civil conversation. I thoroughly enjoyed this, and I think we need to have more of these, because I think they really cut to, the flesh of the matter, the bone, and what we need to do as a country and the issues that we're dealing with from a very technical perspective. And, it adds to the value of the conversations that we have here on Friday Drinks. Thank you very much. And thank you very much to our sponsors. That's PAAB. Thank you very much for the conference. We've thoroughly enjoyed it. The plenary sessions were quite enriching. And as you can tell from the gentlemen I have here, we had the right people. And so good afternoon, good evening, good morning, wherever you are. Please continue tuning in. Cheers.